Hello, everyone. Thank you for joining us on this lovely Saturday to our first time home buying webinar. I'm going to give everyone a few minutes just to log in. Usually there's some tech issues here when we do have a webinar, and it sometimes takes, some attendees some time to join us. So I'm gonna turn off the camera right now, but we're gonna start promptly at 10:35. I'm looking forward to it. Welcome, everyone. Grab a coffee, grab some tea, some breakfast.
Yeah, open your windows.
All right, it is 10:35. Welcome, everyone, to the first time homebuyer webinar. I got a great panel of experts joining me. Chris, Sean, you're more than welcome to turn on your cameras, your mics as well. Let's get comfortable here. Welcome, everyone. Hey, Sean, thanks for joining me.
Hey
Chris,
Tyler,
how
thanks.
are we
Hey,
doing?
Tyler, how are you, man?
I appreciate you two joining me for this first time homebuyer webinar. And, the reason why I wanted to, or we, the team, wanted to put this on is it's been a little bit since we've actually run a first time home buyer webinar or an event actually with our EC. And we think it's time, especially, with how confusing this market is right now, it's adding a layer of confusion. And we think just going back to the basics, really explaining the home buying process, especially to first time home buyers, is really critical right now because what I'm finding, Chris and Sean and everyone listening now into the recording is the actual process of first time home buying, in my opinion, is rarely confusing, right? And it's not because people aren't capable why there's mistakes happening. The confusing part is because most people really never get the process explained in the right order. And I find that when it's planned and when the blueprint isn't clear, the plan rarely is as well, and that's what makes mistakes happen. I'm sure you both have seen this as well, right? The wrong expectations, missed opportunities because the plan just wasn't set in the right way, and a lot of stress, right, when it comes to getting ready to close because of some of the uncertainties or some of the unknowns that weren't explained to first time home buyers and buyers in general. And today's discussion is just about that, which is the blueprint on how to buy your first home the clarity that surrounds this buying process, and hopefully explaining the sequences in order to provide some confidence to all of the insiders who are watching this first time home buyer seminar. And we are going to keep it. I want to preface before I introduce these two gems of service providers that I have joining me, and experts that I have joining me today. But we're going to keep this webinar high level and practical. This is really education on the overall process on how to buy your first home. And this is not personal advice because, Chris, Sean, myself, we're going to say this throughout the conversation today. Everyone's situation does vary. There is not a one size fits all plan. And when it comes to some of these personal advices, like for example, where can a buyer benefit from putting their money, for example, in some of these accounts, like we might cover it if there's questions there. But when it comes to the overall process, that's what we're really trying to hammer home today. And we're going to keep it structured. I think the way that we're going to be really giving the best advice is for us just to go through the process in a as linear as possible for format. But just know that we encourage questions, as I said in the chat. So please just ask away. And while I started jibber jabbering, I did want to make sure everyone's attention is focused on these two gentlemen right here that is spending their Saturday and going through the process with us. I'm not sure where it sees with everyone, but for me, under me, we have Chris D'Souza, 20 plus years of expertise as a mortgage advisor with the Sherwood Mortgage Group. Chris, thank you for joining us.
Thank you for having me. All my pleasure.
And then over here, we have Sean Dandywall, again, 20 years of service as a real estate lawyer with RZCD Law Firm. Sean, thank you so much.
Thanks, Tyler.
My name is Tyler. My name is Tyler Walburn, and I work with REC Canada. I'm the VP here at REC Canada, but I'm a realtor first, and I do have over a decade of experience just guiding people through the process. And these two gentlemen, why I'm so happy that we all had time in our schedules to have this webinar together is we have worked a lot of purchasing deals together amongst the three of us or amongst our organization with Chris and Sean. And there is not another mortgage advisor in Laura I would love to have joining me to talk about this process. So I really appreciate, guys, you giving me the time today.
Thank you, man.
So, as I went through the introduction, I did talk about kind of the overall structure of how I wanted to go through the webinar. And, I think the first piece that is really important to understand is who is your team? Right? When we're thinking about buying a home, who is that all-star team? And that's really the first start, which is understanding, what hat everyone plays in this process and when to assemble that all-star team. And I'm going to start it with myself being the realtor. The realtor is your quarterback. My job and the realtor's job is to, show you homes and negotiate on your behalf. But it's not just that. We are the quarterback. Our job is to make sure that all of the other pieces in this process is being fulfilled. And we are the bridge of sorts if there is any, unexpected occurrences that happen. And there is always turbulence that I find. And we're here to make sure the ship is going in the right direction. And Chris, I'm going to talk to you first. You are the mortgage broker. Do you want to go over really high level what the mortgage broker does in this process?
Thanks again for the introduction, Tyler. Much appreciated. I know this is going to be an action-packed event here for the next 45 minutes or so that we have. So I think we're going to have to squeeze as much information as we can. So as Tyler mentioned, if there's any questions, please put them in the comments and we'll be happy to answer them. But, I would love to start off by letting everyone know that, the process of getting started as a first-time home buyer really stems from your thought process and your mindset and where you are today in your life. Are you dating? Are you single? Are you married? Do you have kids? Are you planning on having kids? And the reason why I say that is because we map out a whole portfolio from you within our process, and we give you a holistic view of what happens from start to end. So there's no surprises. you know exactly what's going to happen. We have Sean here that'll tell us on the legal side. You have me that'll tell you on the financing side. But typically, we'll walk you through a three-step process. And when you start off with Tyler, Tyler's going to do a fact find on all the things that you're looking to do, and help you narrow down your search. But before you can narrow down your search, that's where I come into the picture, and we really design a portfolio for you, and we walk you through a three-step process to get you into the application to see where you're at. Now, the application is just really to give me an idea of how we can help. Once we know how we can help, then we're going to guide you through the process of all the things you need to know. So, for example, you fill out the application, it comes in, we do a 30-minute intake call for you to give us an idea of what it is you can actually qualify for. Once we know what you can qualify for, we pass you back on to Tyler. And then Tyler goes and does all the window shopping for you. Now, whether you want to buy this month, in 3 months, next year, or the year after, it doesn't matter. We will tweak that for you along the way. But the most important thing is understanding what it is you need to do to get into the market. By doing so, yeah, go ahead, Ty.
No, keep going.
No, but by doing so, it matters as to how much money do you have. How much is there's three criterias. It's your income, your credit, and your down payment. So the higher the income you earn, the less of a down payment you'd have to put down. All banks have different guidelines. So within those guidelines, I always say, look, you may qualify to purchase an $800,000 property, but is it wise for you to buy your first home as an $800,000 property? And 9 out of 10 times the answer is no. And the reason being is we want to help you get into the market. So we want you to be able to budget yourself accordingly, get into a property, you buy where you qualify. So again, you may qualify for 800,000, but your budget may only allow you to buy something up to 600,000. And that's okay, because your first home that you buy is not going to be the home that you live in forever. It's really the first home that we try to help you hold on to forever and use as a piggy bank for future properties that you'd like to buy later on down the road, or if you're deciding to sell and upsize and continue to grow the size of the home from a condo or a townhouse to a semi-detached, from a semi-detached to a detached home. And there's a progression within that time frame. So the majority of our clients that work with us, they're usually a lifelong client for us because we're helping them grow their portfolios.
And you said a lot of important pieces there, Chris, and I appreciate the introduction, because one of the mistakes that I do see a lot of first-time home buyers, and really a lot of buyers actually just looking for their primary residence in general, even if they are, they have gone through the process a few times. I think one of the pieces of advice is I give, but I rarely see people take, which is stomach the least amount of houses possible, right? You're trying to make sure that, especially when you're buying your first home, that it gets you on that ladder when it comes to home ownership, right? This property ladder that we all talk about. But we want to make sure that you're not stuck on the ladder. And what I mean by that is, if you go and what I've seen is, if you go buy a house that's a little bit too big, or that really stretches that top of your budget, that the mortgage broker like Chris would have guided you on, in regards to, like, here's what you can, here's what you're approved for, but here's what I think you can probably afford. If you go to here's what you're approved for to the top of it, and sometimes I see a lot of buyers really stretch it for whatever reason, right? And what I find is that then you're house poor, right? And we're seeing a lot of, especially young Canadians, experience this right now, which is that they did the right first step, right? Which is save up money, say no to certain luxuries that they've had to forego for a bit, so they can put themselves in a position to buy. Once they buy, now they're completely, fixed on the monthly expenses that they have, which is usually a lot higher than what they were experiencing before, and they're stuck even more, right? So some of the luxuries that you usually get, or that you should get, is something that you have to forego. But if you stomach the least amount of houses possible, it at least gives you the opportunity, right, to still enjoy life, right, and still enjoy the environment that you're in. And I'm good. I have actually like three more questions when you were starting talking, Chris, about some of the things you said. So I'm gonna hold it. I wrote it down. So I'm gonna hold it. And I want to go to, that third person when it comes to assembling your all-star team, which is a real estate lawyer, which is what Sean Daniel has done for 20 years. And Sean, what is it kind of high level that real estate lawyers do when it comes to helping buyers purchase homes?
Thanks, Tyler. So I always joke and I always say, like, I'm the guy that makes the dream come true. I hand the key to the home buyer,
Yeah.
right? But our job, in essence, just to keep it very simple, is to provide good title to the purchaser. So we want to make sure that the new first time new home buyer or any home buyer has good title to the property, meaning there's no outstanding mortgages or judgments against the previous seller and that you have good title. So that means that you are the owner of the property and it's only subject to the mortgage that you've received on their property. And that is it. You don't want someone knocking on your door 6 months after you bought and say, hey, the previous owner didn't pay the mortgage and now you owe us this money, right? So we make sure that you have good title to your property. In essence, that's what we're doing. Um, but once you've put in an offer on a home, usually there's two or three conditions that the lawyers will put in there. One is financing condition, one is an inspection condition, and sometimes there's a lawyer review condition for us to review it. So we'll review the agreement, and this is where, I think this is very good because we'll see clients that will come and purchase a home and it's conditional on financing and usually it's 3 to 5 days, and then they're scrambling to get their financing approved.
Yeah.
Where if you get your financing sort of like a pre-approval with like someone like with Chris or another mortgage broker, you're in a better position in closing your home, right? You don't want to be stressed out saying, am I going to get my pre-approval? I want this house, and then you find out you're not pre-approved. So these are the kind of the steps you should do before entering into an agreement, making sure you have a pre-approval so you know how much of a house you can buy.
And I find just going through the process, I actually bought my first real estate property with the two of you right here. So this is
Yeah.
really close to home for me. Chris helping me with my mortgage and Sean helping me with the closing process as real
Mm.
estate lawyers do. And I found anyways that one of the resources like I really leaned on was a real estate lawyer because there was a lot of confusion like in regards to, for example, some of the closing adjustments. When does the appraisal happen?
Yeah.
What exactly are you seeing like when you're looking for a title search? And just professionally, just connecting you with home buyers, just the way that that lawyers review, especially for condos, these status certificates or these
Yeah.
large condo documents is such a necessary resource. And I find personally, like, I think, it's quite obvious to a lot of homeowners, like they got to engage realtors, they have to engage a mortgage broker. But I find like one of the problems that I see, or one of the mistakes I see that first time home buyers make, or all buyers make really, they don't engage with the lawyer early enough, in my opinion.
Fair,
And
fair.
and,
Yeah.
and especially if it's just kind of introduction, entry level, like, hey, this is who I'm working with. Even if they just explain to you, here's my realtor, here's my mortgage broker, here's what I'm thinking of doing. When when I send you something, just be prepared. Like I'm gonna have some questions and just start that entry level conversation with the lawyer would help because it's just a good resource to have, like a third party where you can just say, hey, like I took a look at this home. The realtor's telling me this and the mortgage broker saying this. I just want to confirm, like, am I okay? Am I okay, or should I be, waiving the stat certificate inspection, even though I've noticed that there's X amount of money in the reserve fund. Like, can you just please like go through this with me? And I think like using you in my home buying process, Sean, was just a breath of fresh air because it's just a little bit of an assurance, right?
Yeah. And I just want to add one thing. Part of the agreement, there's a date in the agreement of purchase and sale. It's called the requisition date. So that is the date that we, as your lawyer, have to search title and write to the seller's lawyer, requisition anything that we see on title that needs to be removed. And the amount of times, and I would not say it's often, but it's more than it should happen, is we don't get the agreement from the real estate agent sometimes after that date. So right there,
Mhm.
you're already behind,
Yeah.
right? Like, like Tyler was saying, you when you start looking for homes, you may want to at the same time inquire with different lawyers just to see who's a good fit for you. So you have your team assembled and you're ready to go. Because like the amount of times I'll reach out to a real estate lawyer, I mean, an agent, and say, hey, I don't have um, their lawyer information. They're like, yeah, they're still looking. Or there's like, I'll get the agreement, but I'm like, am I the lawyer? Because I don't have the contact info. So it's just good to have a lawyer kind of in the back of your mind, like, yeah, I want to work with X, Y, and Z, or speak to a bunch of people before you start, just so you have an idea so you can start.
And
Um,
like on the like that note, which is buyers waiting too long. Like, what are some common legal surprises buyers do run into if they do wait too long?
so like like the good thing is like nothing is really that fatal. Like if it really goes to what we call the root of title, a mortgage, or what we call a writ of execution, they got to deal with it. But sometimes there's what we call these expired instruments on title. We're just cleaning it up. It's not fatal, but we just want to clean up title. We miss that opportunity with the other lawyer. They'll say, well, you're out of time. We don't need to do it. It doesn't go to the root of title. And as good lawyers, we want to clean up title, then it's just an extra cost to my client to clean that stuff up,
Mm.
right? So, but it's very important. There's a requisition date. Like, just, I'm not saying you have to have your lawyer, whatever, but like finalize, but just kind of maybe talk to some as you start the process so you're just comfortable. Because, just like with real estate agents, mortgage brokers, you're looking for a right fit to work with, right?
It's all about that. Like it is such an emotionally charged process,
Yeah.
and you do really have to feel comfortable with the people that you work with. And that kind of leads me into the other people on our all-star team. So we spoke about the realtor being the quarterback. The mortgage advisor is the one that's really putting everything in place when it comes to understanding budget, what you should be purchasing at, the difference between max mortgage, a budget compared to what you actually should be purchasing. And just making you feel comfortable more or less shopping on your behalf to find the right lender. And we'll talk about that a little bit more as we go through the process. We have the real estate lawyer that will, be that reassurance of sorts, like really fine comb through your agreements, any inspections that are there. They communicate with the seller's lawyer and try to make it as smooth as possible. Oh, also with the lender as well. Just try to make as smooth of a closing process as possible, as well as that troubleshooter of sorts. If there is some issues, what can we do in regards to either going back to the seller or going to the mortgage broker, whatever it is. And the other people on your all-star team, home inspector is a big one. We found in me being in the industry for 12 years, like when the market was really hot, I have seen so many home buyers skip the home inspection process in general. And it is and I get why, because the multiple offer situation, you can't come in with conditions. And there was a time when you would have to put offers in for 10 properties to maybe get one, right? But home inspections are really critical just to see the health of the property itself, especially if you're looking at a semi-detached, a townhome property compared to a condo. As well.
Can I just add something to that?
Sure.
Um, the home inspection is very important. Like, and I understand, the last couple of years it was so hot, like you had to have good offers or clean offers, what they would call it. And, you're buying blindly because the market was hot and you wanted a house. If something is wrong with the home and you don't do a home inspection, you're stuck with it, right? So, people buy $1 million homes, or even if it's your first home, 600,000 or 500,000, it's a lot of money. You're stuck with it. So, like in this market, we can do the home inspection, and it's not as, I don't know, maybe as competitive as it was like 2, 3 years ago. But the home inspection is very important. And I just want to add one little thing. We run into this on a weekly basis, not a weekly basis, at least once a month. You know, they move into the house, and the stove is broken. Like the very first day that they're there, the stove or the washing machine is, and the clients call and they're upset, and or they find out, maybe a week before closing. There's not much we can do because we can't force, because it's such a small repair, the buyer still has to close. I know it sucks. It's not good, and like the seller should do the right thing, but some sellers don't do the right thing to fix it. So, I try to prepare my client when I first talk to them to give them that, just to give them a heads up. Hey, like if something like if you see a broken window or the machine's not working, I'm sorry, you still have to close. You always have remedies in court, like small claims court, but it's not worth it. Like a washing machine costs $1,000, small claims court's going to cost you two, three, four
Yeah.
thousand dollars, right?
Well,
That's why you want to do the inspection.
even like obviously like an appliance for someone who just spent a lot of their savings to go
Yep.
and buy their first home, like an appliance breaking is a big thing. But imagine if they didn't do their home inspection and didn't catch water penetration in the basement, and
Yep.
then there's a foundation issue. I'd rather take the appliance breaking than that foundation
Yeah.
issue. A home inspector is very important in this process. An insurance broker is another one that is probably Sean, you know better than me.
Yeah.
That's probably missed a lot of times.
Yeah.
The insurance broker is going to help getting you set up with homeowners insurance, and it is a requirement, especially if you're getting a mortgage.
Yeah. And
To
and
get
and in condos these days, it's very, very important that you get what we call content betterment improvement insurance. Even though the condominium corporation has an insurance policy, it doesn't cover the insides. Like if you look in Tyler's office, if that was a condo, it's not covering the cabinets or the floors. That's on you.
Mhm. And another person that is part of the process, but usually speaks to the mortgage broker is the appraiser as well. They're the ones that are going to be going into the property as you're getting closer to closing and giving the lender and yourself an idea of valuation. And Chris, in regards to the appraisal, I know there's a few different pieces of that process for the appraisal. Is there anything you want to touch on when it comes to the appraisal process? And we'll talk about a little bit more like afterwards, but do you have anything really kind of hot off the top of your mind that you want to talk about that?
Yeah, I think the most important thing when you're in the offer stage and you're putting in the offer, while that when that offer gets accepted, what we like to do, my team, and I always encourage it to all other mortgage brokers, other real estate agents, is within that 5 day condition of financing, that's the time that we need to also get the appraisal complete. There's a lot of times that I have clients that come to me that say, "Oh, we got the appraisal done after we got the approval, and then the value does is not supported." Okay, so what we like to do in our team is we get the appraisal done within the same 5 days of you getting the financing, which means that we will prepare you in advance to ensure that you have all the right documentation. We know you're 99.9% approved because the only one thing we're not doing is pulling credit at the time. So as long as the person knows how much debt they have, what their car payments are, what their credit lines are, and what their student loans are, once they know what their liability monthly costs are, that allows us in the appraisal process to make sure that the appraisal is complete. There's no outstanding debts. There's nothing that's going to deter them from being able to be approved aside from this value. Now, the reason why I say we set everyone up from the beginning to ensure they have all their documents in place is because once the offer gets accepted, we're submitting that approval the very same day. As soon as that approval gets approved, now we're fortunate enough, we're one of the largest brokerages in Ontario. We have a faster turnaround time, which is within 24 hours. meaning that within those 24 hours, once we know what lender we're going to, after we shop the best rates and terms and conditions, we know that we're going to be able to order that appraisal to be able to be completed within that time frame of the 5-day condition. Now, there's also the inspection piece that's happening within that time frame as well. So sometimes in the event that the appraisal doesn't get done within the financing component, we still have the home inspection clause that we can waive, which buys us a little bit more time, to get that appraisal in the event that there's an issue or that we have to get it resubmitted or anything like that.
And talk about like real life application. So when I was looking for my first home to buy, and Chris, I don't know if you remember this, but we had an offer originally in the property, like right at the border of Whitby, Oshawa. Great property, but it was in such a weird street. Like it was like in a little cul-de-sac off on its own, but it was in Oshawa. And we negotiated, we believed at the time, a great price. But if we didn't have the financing condition in place, we probably would have had to put more money in on closing, because what happened was during that time, you asked the appraiser to come to the property to get it appraised, because we were first-time home buyers at the time. We just wanted to make sure, that everything was in order. It was a CMHC insured mortgage, so they had to send an additional appraiser. That's right, correct, right?
Yeah. Yeah, go ahead.
So just to finish on that part. So what happens was, let's say I bought it for 600,000. I think it was 600,000 actually. $600,000. It was a detached property in Oshawa back in 2019. It was a great price. Like even in 2019, it was a really good price. Big backyard in the middle of the cul-de-sac. But when the appraisal came in, it came in at 550, which means that we would have had to put in an additional $50,000 to go and actually get the mortgage for the property, which we didn't have at the time. So we ended up getting our deposit back, backing out of this property, and then going and finding another property, that we purchased. But if we didn't have the financing condition in place and you didn't send the appraisal out during that time, that appraisal could have been a shock for us once everything was, as they say, firm, when we didn't have these conditions in place. Those conditions were lifted, and now we have a tougher pill to swallow, right? Which is trying to come up with those funds to close. But the appraisal is part of the process. And the last person or the last group of people that also sometimes gets overlooked, not as much as an insurance broker, but they do get overlooked, which is family support. Obviously when families coming in and helping you with like a down payment, or they're co-signing on the mortgage, there's that family support there that they need to be brought in a little bit more to the process. But it's important to have your family in place as well as you're looking for your first home, because they're going to be, hopefully, that support, that is not professional, right? That's your home support. And it's very easy to overlook them as well, but they are part of the process, which actually kind of leads me into the natural progression of.
So Ty, just before you get there, just really quickly on the appraisal, right? It's important for everyone to know that an appraisal is required when you're putting 20% down. Okay, that's the cost of the borrower. Anytime you're putting 20% down. Now, if you're going in as a first-time home buyer and you're taking advantage of the first-time home buyer's plan and you're putting less than 20% down, the insurer, which is the insurers in Canada, that they will do the appraisal on your behalf. And because you're putting less than 20% down, and now because you're putting less than 20% down, they're also charging you an insurance premium to ensure that the bank, that if you don't pay, that the insurers that's going to come in and help you to make the payments and support you along the way to get you back on track. So there's a premium that's rolled into the mortgage, but it offsets the appraisal in terms of the purchaser paying for the appraisal versus the insurer taking care of the appraisal. So there's two components to that. One is 20% down, you pay for the appraisal. With less than 20% down, the insurer takes care of the appraisal. So there's two slightly different processes when you're going through the process of purchasing the property within that 5-day condition. So if we're in a 5-day condition and you're putting less than 20% down, now we have to wait the full 5 days or 3 days for the bank to approve the deal and then for the insurer to approve the value of the purchase of the property. Whereas if you're buying it with 20% down, that 5-day window becomes so crucial because we need to ensure that we get the approval on time and we get the appraisal done within that 5-day window.
It just helps with with the surprises, right? When you're coming up to closing. Like if the appraisal waits for whatever reason past the condition, the financing condition, if that happened to me, that would have been a $50,000 surprise
Yeah,
that
and
probably I didn't have saved up at the time.
yeah, and we do that to protect the client, right? We're doing it to protect the client in the event that the value doesn't come in. We can put out the fire within that 5-day window and either, renegotiate back with the seller and say, look, the value didn't come in at what we bought it for. If they agreed to drop the price, great. If not, we know that the client can walk away and we can move on to the next property.
100%. And I really appreciate that insight. And I know you're going to go into it a little bit more as well when we talk about kind of that mortgage process. But now let's kind of go over it like as linear as we can of the home buying process. We like let's say I'm a home buyer, first time home buyer, and I finally did it. I finally think I saved up a little bit of money and I'm thinking about now finally jumping out and buying my first home. And the real starting point is a household conversation. It's not contacting the realtor first, I believe, or the mortgage broker first. I personally think it's having everybody that's involved in this home buying process. If you live with a partner, you and the partner need to sit down and just to make sure this is the right time for both of you. If you are potentially having family support, i.e. in regards to a down payment, it's important to talk to them about what it is we're trying to do, right? Which is buying their first home. Define timelines, define monthly comfort zones when it comes to your expenses, and don't look at it like piece of advice for me is don't look at it like, oh, I have $80,000 saved. That means with 5% down, I potentially can. That's not really good, but like let's say with 10% down, I could go up to 800,000 because I know that's 10%. No. Let's actually work backwards. Use some of these fantastic websites just to begin the process, which like mortgage calculators. Go take a look at like Realtor.ca or something just to get an idea a little bit of what are homes being valued at. But try to set yourself up with a monthly budget, and it's going to adjust after you speak with the mortgage broker. But at least it's a starting point to understand what am I comfortable with spending every single month? How much actual money do I bring to the table? Because another misconception I see a lot is they think all the money that they saved up is going directly towards their down payment or their deposit, which isn't the case because there's closing costs, which is what we're going to be speaking about afterwards, right? But at least put it just like a science experiment. If you were good at school, I would say I was good at math and science. And I would say the first thing I would always write when I have a question that was science or math, I would always write the knowns on the left-hand side first. What are the knowns? How much money do you bring into the table? How much money do you bring into this purchase? Who's helping you? What is the help they're going to be providing you? And what is kind of that monthly budget that you want to aim for? Be okay with some flexibility. Oh, actually, one more. What are some area and house requirements that you're looking to get out of the home as well? Be okay with the last two, which is the monthly budget and the non-negotiables of a property. Be okay with some flexibility as you're going through the process because plans always change a little bit. So have some variance of comfort that some might change this way or that way, but at least have some sort of plan in place, just a rough one. And understand the numbers as well when it comes to closing, right? Which is, you with this home buying process, story, right? The down payment, home inspection fees, appraisal fees, legal fees, land transfer tax, moving costs, closing costs, furniture costs when you're moving in. Like just have a good idea of like, if I buy this at this price, what does that look like? And
well, Ty, the rule of thumb on that, Ty, really quickly, the rule of thumb of that is if you're buying whatever purchase price you're buying the property for, you need to have 1.5% for all of your closing costs. And that includes all of what Tyler just mentioned, your legals, your land transfer tax, the title, your legal fees, all that's part of that 1.5%. And when you're putting less, it's important to know that when you're putting less than 20% down, not only is the bank going to want to see a 90-day history and confirmation of your down payment, they're also going to want to make sure that they can see that you have that extra 1.5% on top of the down payment. So if you're putting 20% down, you just need to show the down payment and show the 90-day history of where the money is coming from. The closing costs is not looked at that point, because you've now passed the insurer side of putting less than 20% down, which is a requirement to show the 1.5%, versus putting 20% down where you're on your own at that point on the closing cost.
Yeah. And so 1.5%, if I'm doing my math correctly. So that means if if you have a $600,000 purchase, you're looking at, saving up how much? Like, is it $7,000, give or take?
Yeah, but out of that 1.5%, as a first-time home buyer, remember, they're also going to get their land transfer tax credited back to them. So they're not using the full 1.5%. They just need to show that they have the 1.5%.
And when it comes to like additional savings that people should have when they make their first purchase, like, do you guys have like a rule of thumb or some advice when it comes to, if you're deciding to go and buy a home, like how much should they have kind of in that reserve fund after they close?
Well, I always tell, like, just in my own, I don't really tell my clients because it's up to them, but I would say, like, let's just say your appliances aren't working, right? How much are appliances? I don't know, 5, 6 thousand bucks.
Mhm.
Like, just think about, like, okay, if I come into this house, if there's unexpected repairs or appliances break down, because equipment does break down, you may want to just have maybe like $5 to $10,000 just on the reserve, just in case if something comes up.
Mhm.
Even as homeowners, like, let's say, ourselves or like, our listeners, maybe their parents' home, things break in your home unexpectedly, right? So you should have something saved to fix those unexpected breakdowns.
Yeah. Yeah, I typically say that, if you have 3 months of mortgage payments set aside, that kind of gives you a little bit of a slush fund. But it's
Yeah.
important that when you have that money aside, it's also important to know that, if that is your fallback. And, a lot of people, when they buy their first home, they want to renovate the property, they want to, change the kitchen cabinets, they want to do new floors, they want to do the washrooms. My thought process on it is, whatever's necessary to fix, you fix. And if it's going to cost you more than what you can afford to fix, then there are other programs that we can present to you where you can do what's called like a purchase plus improvement. So if you're buying a dated home, you're getting a good price on the property and it needs some work, but you only have enough money for the down payment and the closing costs. We can now show you how to build in the renovation costs to bring the property back to up to a better value, and increase the look of the home by rolling in those renovations into the mortgage. So that's what I'm seeing a lot with a lot of the dated homes that first time home buyers are buying. But I'll guide it. I mean, it's specific to each individual, and we customize each of your portfolios independently depending on where you're at, what type of property you're buying, the city you're buying in, the progression of if you're going to upsize from, like I said, that town to a semi. But it's really just to give you a general idea to say that if there's things that need to be fixed in the home and you really like the home and you can see past all of that and you can see the bigger picture, then we can present you an improvement program that you can upkeep the property and bring it up to a newer value.
I always say like 3 to 4 months. Like if you have 3 to 4 months saved when it comes to your monthly expenses, I know you did mortgage, your mortgage payments. Like if you get 3 to 4 months saved, that's a pretty healthy, in my opinion, savings just in case. Like as you both said, right? You like even with the home inspection, right? Like they do their best, but you really don't know what you're getting into after unless you spend a full night there and you live in the property, right? Like um so it's interesting. And before I kind of go into the second stage after talking to your family and building that plan, one resource that I know a lot of our insiders have gotten, use out of it as well as myself is this book right here, The Real Estate Intelligence. It actually covers some of these common questions in the process on buying, selling, and investing. If anyone wants a physical copy of this book, The Real Estate Intelligence, send us an email. I'll put into the chat, info@info. So info@reccanada.com, and just put in the subject, real estate intelligence or real estate book. I'll have the team reach out to you and we can mail it. This is such a good resource. When I first started in real estate, Jazz forced me to read this many times. I had a CD with his audio, with his voice on it, going through this book as well. So I listened to him way more than I wanted to listen to him at the time. But it did teach me the process. Like, it has everything here. Like, things that we're speaking about, it's all in this book. And it's been a great resource for a lot of insiders. If you want a copy of it, just send an email, info@reccanada.com. Now, going into the second part. So we spoke to the family. We built a pseudo plan. The next person that I would recommend talking to, maybe a little biased, but that's a realtor. I think it's now time to have a realtor planning call. It's time to translate those goals into realistic purchasing outlooks. The realtor will then ask some of these kind of key questions like budget, price point, location, why that location, who have they already connected with, who has their family worked with in the past. They'll ask these really good guiding conversations, and just to kind of give an overall pseudo structure of, okay, this is what we're looking for in a home. At the end of that first conversation, because there's many conversations you're going to have with the realtor, and this is before we go out and see homes, what they're going to do is they're usually going to be setting you up with what we call like a home finder search. So they're going to share their screen, show you some potential homes that fit that criteria that you're looking for. A good realtor will also shed light on some of the other locations or some other potential non-negotiables that weren't covered, just to give a more realistic approach to this process. Set you up with daily, weekly, at least weekly updates on that specific targeted market. My recommendation when you're speaking to the realtor, start small and move outwards instead of going the other way, casting a big net and then zoning in. In my opinion, it just gives you, it's great to have a lot of options, but sometimes from what I can see is like, having all of these massive, locations, it's just really hard to zone in. First, what I would say is, if you could wave a magic wand, which area would you and your family want to live in, or where would you want to go and buy? And then from there, let's start there, see if it's realistic. If not, we'll add to it outwardly. And at the end of it, the conversation, they'll then connect you to a mortgage broker like Chris D'Souza, as well as a real estate lawyer just to have in your back pocket, and an insurance broker. Because again, the realtor is the quarterback. So they're going to be the ones to be the connectors. But a good first-time home buyer realtor, if they've worked with a lot of home buyers in the past, they won't jump to go and do a showing with you. What they would do instead is like finalizing that plan to not waste any of your time, the buyer's time. Because I've seen it before. You can have a great, down payment, but if your debt and if your income doesn't match what you're looking for, sometimes it doesn't matter what you have as a down payment. The lender won't see you as someone who's viable to get that mortgage. And then there's going to have to be other pieces that we have to put together to maybe make it happen or not make it happen. But I think step 3, after speaking with the realtor, the next step is that pre-approval mortgage readiness conversation with someone like Chris D'Souza, or Chris D'Souza for that matter, because he is great at what he does. And Chris, like in my expert opinion, at REC Canada's expert opinion, we need to engage with the mortgage broker as early as possible. I think obviously before we put an offer into anything. And Chris, do you mind just covering a little bit about that initial conversation? Like, what lenders look at, how to approach that down payment conversation, and really what's the difference between like that pre-approval and being ready to close? Like, what is it that you speak about in that initial session with a first-time home buyer?
Yeah, well, once like Ty, maybe we can just step back. Like when the introduction typically comes from you, right? So you're introducing all of the first time home buyers and putting me on the email. Once we receive that email, we'll respond back to all of you and say, thank you for the referral. Be happy to work with the client, and then we'll also put a link into that email where they can book a time in my calendar to go over all of this for a 30-minute intake call. And then once
Mhm.
that's done, then another email goes out to them with a link to the URL for them to complete the online application. Once the online application is complete, again, I'll review it, and then another link will go out to set up a call for us to review this application with the client. Once that happens, I go through a holistic view of what's going to happen from start to end. Income, credit, down payment. Where's the down payment coming from? What type of income are you earning? Are you self-employed? Are you salaried? Are you hourly? Depending on what type of income you're earning, there's different documents that are required. The down payment component can come from different buckets. A lot of what I'm seeing in today's market is a lot of parents are helping their kids get into the market. They're saying, look, instead of waiting till we pass and pass on the money to our kids when we go, they are now ready to say, let's help them when they're in the need of it, which is in today's market or in the market that they're looking to buy in, as opposed to when they pass. Once that down payment is confirmed, the income is confirmed. Now it's credit. Now for credit, when I'm bringing on a client, I just ask that the client knows and can tell me, yes, I pay my credit cards on time. Yes, I have two credit cards. Yet my limits are 10,000. My balances are 2,000. As long as they know their credit component, because we're not pulling credit at this point. But what we're doing is we're setting you up as the realtor to ensure that you can help the the borrower narrow down that search to what they can actually qualify for. So if they're buying a townhouse and there's a condo fee or a maintenance fee on the townhouse of, let's say, $400, I'm going to weigh out the pros and cons to say, well, do you really pay the $400 and go and buy that townhouse? Or do we remove the $400 and maybe get you into that semi-detached property, which you can still potentially qualify for? So now they have two variables and two types of properties that they can look at, which will help them expand their search.
And that that's also the conversation you're gonna have with them, which is, here's what you can buy. Here's what the lender's telling me that you can get approved for, but here's what you should buy. Here's kind of the price point. And I found when I was in that process with Chris, that was the reassuring thing for me, which is, the approval amount compared to what I should buy was two different things. And it really did help, right? Like, and I think everyone kind of naturally leans a little bit more than what they should buy. I think it's just a natural human element. Like, they see that home, for a little bit more, that nicer backyard, or more space in the backyard, or that nicer kitchen. But I think it's an important piece of that conversation, right? What you should buy and what you can buy are two different things sometimes. And Chris, like, if someone wants to buy in the next like 6 to 12 months, what are like three or some of the things they should do first to improve their mortgage position? Like, what is that? Like, what are some of the things they can do to improve their mortgage position?
Well, one is to ensure that they're not buying another car, for example, and they're not going to incur any additional debt.
Yeah.
Okay, so you want to keep your debts low. Um, Once your debts are low, you want to work on your down payment and where that money is coming from. Figuring out how much of a down payment you need. The first time home buyer plan allows you to put 5% up to the first 500,000 and then 10% on the difference. But understanding how much you can qualify for is the most important piece, which is what we'll do. But once we're really holding their hand along the way. So every step that they walk to go through the process, the down payment component can come from an RSP, it can come from their own savings, it can come from a gift from their parents. But wherever the money is coming from, it's important to ensure that you have that money in the account for 90 days. Now, one of the biggest mistakes that people make is they'll get all the money, a portion from the RSP, a portion from the parents, a portion from their own savings, and then they'll move it all into one account. Okay, so ask right now everybody not to do that. Just keep it where it is. Let's ensure we know how much money is in each bucket. And then once I get the information on each of the accounts and where the source is coming from, I'll give them enough time to ensure that they can put all this money together in one account in order so that way when they speak to Sean, Sean says, okay, this is how much money we need for closing, and it's all sitting there at the right time.
It seems like it's a painful subject for you. Um, but for everyone listening, it's really important what Chris said because the lender has these requirements, for how long the money needs to be in an account. And even if you have the pre-approval and the appraisal's done, it really only matters the day of closing, like truly, like is everything that Chris, myself, Sean packaged up together, the lender's going to look at it at that point. And if you make, like, I see this a lot actually, like the week before closing, people move money. They're in this state, they're a little stressed out, they just didn't think about it correctly and they're moving money. And if you do it as close as you can towards closing, it really could complicate things.
It complicates it severely because now any deposits that are moving from one account to the other, or for that matter, any deposits that's going into the account within those 90 days, if there's large deposits going into the account, now the bank is going to ask where this money came from. So now we have to show them the source, which is going to incur more documentation. It's going to get document heavy. We're going to have to show 90 days of where the money came from. We're going to have to show 90 days for the money going into the account that it went to. So we try to eliminate all of the smaller headaches that people do. No, and it's a normal thing. It's only human nature to say, let me put all my money in one account. It only makes sense.
For some reason, I find it's also a human normal experience that this happened more than one time where they would go and get like they buy their home, it'd be accepted, fully accepted, and then for some reason they feel the need to go get a car.
Yeah.
In between. For it happens more than I'd like to admit, and I don't know why it does, but it does. So please, if you are in the process of buying a home, I'm sure Sean and Chris also recommend this. Don't also get a car at the exact same time, please.
Yeah,
Um,
yeah. Well,
okay, so
we now have a whole list of do's and don'ts. Okay, so whatever the do's and don'ts are, and I put it from on Sean's behalf, on the realtor's behalf, and on my behalf, all the things that I know that could interrupt the file along the way within the process, we fully inform them well in advance to ensure that there's no hiccups along the way.
and I appreciate you going through the that initial conversation with the buyer when they're trying to get their mortgage, because that's the third phase, right? So first is build the plan. Second is engage with your quarterback, i.e. the realtor. I'm Brett Favre. That's my favorite quarterback. That's who I am. And then we have the mortgage broker conversation with Chris. Step 4 is the fun one. Step 4 is when we start to search for properties. And at that point, Chris, myself, the mortgage broker, the realtor, they're going to be communicating. You're going to relay some information back to the realtor as well and say, okay, I've been approved for X amount of a purchase price. That's kind of where I'm comfortable with looking. That's when we get to have some fun. That's when we get to go and see some properties. And we get to do some window shopping first. And I say window shopping first because I have told people not to put offers in their first showings, and I will still be doing that for 20 plus more years of me being a realtor. I really think, especially first time home buyers, they need to see at least 10 to 12 properties before they make a decision on which one to put an offer into. If that means that we lose some homes, it means we lose some homes. And the reason why I'd recommend seeing 10 to 12 before you put an offer in is because you need to really understand what are truly your non-negotiables and what are your negotiables when it comes to that home that you're going to be living in. I don't care if your budget is 3 million or 300,000. Every single time I've worked with a home buyer that is buying a home for themselves to live in, every single time there has been some compromise in the home. It's either the price, the type of home, backyard space. You got to understand what the compromise is and what are the things that you absolutely can not have in your home. And you need to understand, and the only way to do that, in my opinion, isn't beforehand. It's when you're actively looking at properties. It's when you see yourself living there. And sometimes it means compromising closet space to get a bigger kitchen. Sometimes it means that second washroom so you can get a balcony. And compromise is natural in this process, but understanding the non-negotiables is very critical. And the only way to do that is by seeing 10 to 12 properties, in my opinion. And then from there, you can have some, you can then get a little bit more serious in putting in, these offers. Don't fall in love with the numbers, because all of that is negotiable, and when you're doing the showing itself, there are some realtors, and I did this at the beginning when I was showing properties too. I'd go in, I'd open up the door, I'd turn on all the lights. I would guide you through each of the bedrooms and the basement and the furnace. Now, what I'd recommend doing if you're a home buyer is ask your realtor. I hope it's myself, but ask your realtor to, go and go into the living room. I do this. I literally turn on all the lights. I open the doors. I check that there's no surprises in the property because usually it's my first time seeing the property as well, unless it's a revisit. And then I sit on the couch. I hang out in the kitchen and I wait for you to ask me any questions. I do not hover over you, nor do I think any realtor should. You gotta be comfortable. Like you gotta treat the home like yourself. Flush the toilet, turn on turn on the shower head to see how that feels, like how it looks, maybe not how it feels. Don't take a shower in the home. And open the fridge, close the cupboards, like turn on the stove, like do a quick little check. Obviously don't abuse it, but try to picture yourself living in this home. And that's a good way also to see the negotiables and non-negotiables as well. And when finally we're at a point where we want to put in an offer, that's when the realtor will then go through the comparable data, what we think it's worth. They'll contact the seller's representative, usually a lawyer at that point, but sometimes it's a lawyer, sometimes it's a seller directly. Try to get an understanding of why the seller is selling, what kind of their fish a little bit in regards to what price they were looking for, how much activity. Like there's some questions that I would ask being a buyer's representative to try to fish some data out of the seller's representative. And at that point, you put in an offer. We already covered a few things that we need to have in an offer, or that we should have in an offer. In a perfect world, we would want to see 2 conditions on the offer. It doesn't matter what property you see. Actually, it actually does matter. So if it's a freehold property, so a non-condo property, you definitely want to have you should have a financing condition between 3 to 7 days. Usually the average is between 3 to 5 days. And then home inspection condition, we already talked about the importance of those in length, but those 2 are really important to have. And the third one that we see sometimes when it comes to a freehold property is a lawyer's review condition. Just to make sure, especially for first-time home buyers, we got to make sure that you feel comfortable and you understand what you're getting into. And the lawyer's review will help you with that. All of them typically vary, but usually between 3 to 5, hopefully 5 to 7 days. And if we're representing the buyer, we're trying to get as much down the road as possible with these conditions to give us some time to build that plan. If it's a condo, there's a condition that we would add onto it. And I think this is a non-negotiable, even if there's multiple offers, and it's a status certificate condition. And that's what we talked about a little bit at the beginning, which is, when you buy a condo, there is something called a status certificate or condo docs. And Sean can talk about it a little bit more in detail. He's read far more than I have, but I own a condo, so I have read them a few times as well. But essentially, it's the health and the wealth of the condo. They have their traditional guidelines and bylaws that they have within the condo itself. The rules, for example, sometimes there's pet weight rules, or what you could bring in the elevator, what you can't bring in the elevator. Is propane allowed? Is propane not allowed? Some of these common ones that you should ask the lawyer what the rules are. But some of the most important pieces of the condo document are how much money is in the reserve fund, which the reserve fund is used to offset any large special assessments or repairs that need to be done, to the condo, or sometimes like satisfying like previous invoices for whatever reason. There's obviously sometimes disputes when it comes to working with a lot of people in a large space. But the maintenance or the reserve fund helps with that. And your maintenance fees and sometimes one-off installments helps replenish those reserve funds if something does happen. But the condo document's able to see that. As well, it tells you what your maintenance fees cover and how much the maintenance fees are. And I believe sometimes, Sean, correct me if I'm wrong, it also does tell you if there's any expectations on the maintenance fees increasing. Is that right?
Sometimes they'll mention that. Not all the time, sometimes. But the other thing that I'll mention is what you are buying.
Mm-hmm.
Because sometimes we'll see, okay, it's the condo unit. It'll have if there's a parking spot and a locker. And sometimes someone thinks they have a locker, but on the status certificate it doesn't show a locker. So we got to fix why is there a mismatch here, right? So that's why one of the important parts why we want to see the status certificate is to see what are you buying? What is the monthly condo fee? Because um, believe it or not, sometimes the figure that's in the agreement of purchase and sale is not what the status certificate states. And
Yeah.
sometimes, the seller might think, oh yeah, I think I pay about $500, and he tells his agent it's about 500, and really it's 600 or 650 or 450. So it gives us a chance on that. And what Tyler was mentioning, the reserve fund. So the reserve fund is a portion of your monthly condo fee. So let's just say your condo fee is $500 a month, maybe $100. I'm just giving an example of that monthly fee goes to the reserve fund. And the reserve fund study is completed every 3 years. So there's a handful of condos that don't do it, and we need to know why because it's mandated under the Condominium Act every 3 years a status certificate, I mean, a reserve fund study needs to be completed. And it's a these big engineering firms come in and they basically do a huge inspection on the building to see what is the lifespan of these major components, elevators, the HVAC units, the windows, the roof. So they kind of project each year how much money needs to be spent on maintaining this condominium. Just like how you have a home. You know, I know most people don't do it, but we should. Every month we should be stashing some money away each month for, window repairs or replacement or the roof replacement, the driveway. So um, we want to make sure that the reserve fund is adequate. So if the reserve fund study says for the year 2026, 2027, there should be $1 million. And if the reserve fund study says, oh, there's 900,000, because it's not a perfect science, like, 900,000, a million seems about okay. But if it shows that it's only 500,000, we got a big issue.
Mm-hmm.
The reserve fund study says there should be $1 million in here, but there's only 500,000. We need to know why.
And then
Right.
what happens if there's not enough money in the reserve fund to cover these?
So then you're going to get what we call a special assessment, right? So they'll send in a special assessment notice to all the unit owners and say, you know what, there's not enough money in the reserve fund. We need $2,000 from each unit owner. Right. So imagine you're a first-time home buyer and 2 months later you get a notice, right? So you want to make sure someone is reviewing the status certificate.
It's very important.
Yeah.
I've seen like financing be approved, inspections be approved, but when something comes up in the size certificate, you should not take that lightly. Like
Yeah.
that
And
is,
like there's some buildings that don't allow pets and you got a dog, right? Like,
I was just about to say the exact same thing. That's the number one thing that
yeah,
I get for all my pet lovers that are out there. If you have
yeah.
a dog, you have to make sure that that dog is a certain size and a certain weight in order for you to even have the dog in the unit. So
Yes.
that's deterred a lot of people from buying in different properties for that reason.
Yeah. And
in,
there are
in
some buildings that don't have pets. There's no pets allowed.
in my condo,
Allowed, yeah.
we just got a notice. Talk of like funny, like you're bringing this up. We got a notice last week reminding everybody that snakes are not allowed because I guess one of the unit owners or tenants that live in the building just brought their huge snake just like to kind of bring it up to their property, and they were enforcing it. I would imagine they're going out to that specific person that lives there and enforcing these rules. And my condo is pretty strict, so
Yeah,
uh,
and we're seeing a lot of new built condos um, are becoming smoke free.
yeah,
So if you're a smoker, you
find one that's built in the 80s.
yeah, no, even new ones they still allow it, but you got to be careful. Like, oh, I love this condo, but then you find out, oh, you're not allowed to smoke in here. Um, so it's very important that you review it, the status certificate.
And when the offer is accepted and the conditions are still in place, that's when we do a lot of work. That's when the quarterback, i.e., the realtor, will, if there's a home inspection condition, that's when we call the home inspector, get them to the property with you there as well, with the buyer there as well. That's when Chris starts his work, reaching out to different lenders, getting a few pieces of information that he doesn't have from you at that point. Like Chris, you pull credit at that point, right? When it comes to the financing condition or not yet?
No, yeah. So once the offer is accepted, then we'll pull credit
Yeah.
because there's no need to pull it
Well, we
prior
got to
to,
make sure
right?
now, right? We have
Yeah,
to
well,
make sure like we can get the mortgage for this property now.
yeah. So once they go through the process with you, and once you guys, before you put it in the offer, I always ask the agent, the realtor, to send me a copy of
Good point.
the listing, and then whatever I've done on the file, I'll fine tune it because the property taxes may change, the condo fees may be higher or lower, which will impact the purchase price. Like it could increase or decrease depending on the property taxes and the maintenance fees. But one other good exercise that we do to give them a good comparison is if you got a 500 or $600 condo fee, like my goal is really to try and show the client how they can maybe not get into that condo because they have the dog and they need a little bit more space, where if we reduce the condo fee or eliminate the condo fee of that $500-600, that'll increase their purchase price now from, let's say, 550 to 600,000, right? So I can get them into the townhouse at that point without having the condo fee. So it's just a matter of what type of property and where they're at and what they're looking to do, which we will do a full assessment from start to end. So before they even get back to you, they're going to know what they want. It'll make your job a lot easier as a realtor.
And let's say now we're at the part of the process where everything checks off. Financing checks off, home inspection, status certificate, as we talked about if we're buying a condo. All of these are green lights. We're good to go. We got approvals from all the right places. That's when we're going to be waiving these conditions, which brings us into like that offer accepted stage, which I also like to call the anxiety moment, which is the realtor will then give you what we call like a notice of a fulfillment or an amendment to waive conditions, however they want to do it at that point. Sometimes the lawyer would do it, but typically if you're working with us, we would do it at that point with you. And at that point you make the decision. You know, it is your that last check. Just in, is this everything that everything is checked off? Once you sign that waiver, at that point that deal is firm. Once we send it over to the seller, so that is that anxiety part of the process I find, which is now you're locked in, and in between offer accepted, no condition stage to closing date, that's when we do a lot of work in the background. That's when we go for the realtor. That's when we send everything to the right people. That's when Sean usually starts to really get engaged on contacting the seller's representatives, going through that title search that Sean was talking about at the beginning, and we'll talk about that, Sean, in a second. That's when Chris is going to be beginning the process of updating whichever lender you're working with, getting some documents here and there from you because, the lenders will sometimes ask Chris for certain things. And that's when we're also, in most cases, going to be going back and visiting the property, taking measurements if you're going to be buying furniture, getting some checks. Sometimes I see a lot of first-time home buyers bringing their family at that point. It's a really nice moment. But really, when it comes to that stage, it's for the buyer, you've done a lot of the work. Now you're just listening to the All-Star team you've set up and working with them on the process. There's not too much other than waiting for the day of closing. And that brings us into, really that final step of the process. And I'll be giving this one kind of the baton over to Sean at this point, which is the closing process. The lawyer will handle a lot of that stick handling on the day of. And Sean, I'll really kind of start off with day of closing. Like, what is it typically that we see on the day of closing? How does that process work?
So on the day of closing, so if either a day or two, maybe a few days before, we'll meet with the client, we'll sign up our documents. And on the day of closing, so I'm just going to give you an example. This actually just happened yesterday. I meet with the client at 3 o'clock. We sign up the documents. We confirm this is how much money we need from you to close. He goes, yeah, no problem. Let me contact my bank reps. I need to get the money out of my uh, RSP and that new first time home savers
Yeah.
plan or whatever. He emails me like 10 minutes later, please call me urgent. So I call him. He goes, it's going to take 5 to 7 days to get my money. And I was like, what are you talking about? He goes, that's how long they've told me it'll take me, to sell the securities and get the money into my bank account. His closing is on Wednesday. And everyone needs to know when, like Tyler was saying, when you have a firm deal, that is it. You need to close on that day. And luckily, he's a first-time home buyer. He bought a condo, and um, you know, at the end of the day, his parents were able to help him pay for the money that he needed, and then he'll get his money and close. But on the day of closing, what happens is either that morning or the day before, we try to tell our clients to deposit their balance of funds due on closing to us. That morning, usually between 9 and 10 a.m., the banks will wire us the mortgage funds. And if we don't get funds from the bank by 9, 10 o'clock, we start calling the banks because everyone's human. Someone forgot to press send on your mortgage file at the bank to send the funds to us. So then what happens is we put the money together. And before COVID, we actually used to make certified checks and courier the checks throughout the city, like same day couriers. And, everyone's rushing and whatnot. But now 90% of our deals are wired. And we wire the funds. And technology is not perfect. Clients will always ask me, Sean, what time will I get the keys? And I always tell them, you know what, sometime between the hours of 3 p.m. and 5 p.m. And they're like, why not like right away? I was like, well, we get your money, we got to wire the money. Some wires hit in 5 minutes, some wires take the whole day.
Yeah.
So we always tell our client, you know what, if you are moving the same day, plan for like a late closing.
But I
And
have the moving truck. I hear
yeah,
all that's what I hear a lot. But I have the moving truck ready. All my
yeah,
stuff is in there.
yeah, no. So
Yeah.
we try to tell them in advance, like, this is what you need to do. But sometimes they want to, you're eager to move in, right?
Yeah.
So,
It's
um,
exciting.
it's
Yeah,
exciting, right?
It's
Like I said,
exciting.
we get to give you the key to your home.
Everyone wants to
Um,
pop the champagne on closing, right?
yeah.
So like
And
I love that for them, but you're right in regards to like
yeah.
expectations. You gotta have clear expectations.
Throughout this last hour and a half, uh, you've noticed that there's many variables and a lot of people involved. So in our stage is we're dealing with the seller's lawyer. And the lawyer needs to what we call release the deed electronically to us to register. And, as everyone is trying to close, everyone is also busy. So we might have sent the funds, let's say 11 a.m. Their assistant confirms that the money has reached. They have it, but the lawyer is in meetings. So the lawyer is the one who has to release the deed. So sometimes we're waiting until the lawyer becomes free so he can release the deed so we can register and release the keys. But usually the day of closing, like, usually like 9 times out of 10, it's nice and smooth. We get the deal done 2, 3 o'clock and we register. But there's always hiccups, right? Technology, uh, lawyers are busy. So that's why, like, as much as we try to make it go nice and smooth, but something always comes up. But it's pretty seamless on the day of closing. It's the lead up time from firming up the deal to the closing date where everything happens. And Chris knows as well, like sometimes, the bank, Chris will send me a note sometimes and say, hey, the deal's firm, everything's good. You should receive the instructions in the next day or so. Sometimes we forget, like 2, 3 days pass by, and I was like, oh, we haven't received mortgage instructions. We'll reach out to Chris or another mortgage broker to follow up because sometimes the bank forgets to send us the instructions. So we like to have the instructions 5 days before so we can prepare the documents because we also represent the bank at the same time, and the bank will say, Sean, we need you to do X, Y, and Z. So we prepare the documents on behalf of the bank as well.
And what are those typical closing costs?
So typical closing costs, like Chris was saying, 1.5%. What 1.5% is more about, I would say, it's the land transfer tax if you're not a first-time home buyer, because you do get that $4,000 credit, or 8,000 in the city of Toronto because you're paying double land transfer tax in the city of Toronto. And really, the land transfer tax is the biggest closing expense. I don't know, if you're buying $1 million house, it's going to be $15,000, $16,000 outside of the city of Toronto, as an expense. Then you have your legal fees and disbursements and HST. I would budget about $2,000 for that. And the other one is what we call title insurance. So title insurance is required. The banks require you to get title insurance. And if you're buying $1 million house, budget about 1,000. If you're buying a $600,000 house, budget about $600. And title insurance is a one-time fee. So as long as you own the house, you could own the house for 5 years or 30 years. You'll always have title insurance, that one-time fee. And the big thing about the title insurance covers a lot of things, but the main thing is if there's fraud against your property, someone may impersonate you, maybe put a fraudulent mortgage. Title insurance is there to protect you. So that's the main thing for title insurance.
And once we do close and we get the keys, usually our team would meet you at the property at that point. Um, Especially if you're a first-time home buyer, just to celebrate with you and be there to see you unlock the door the first time. But at that point, the real work does commence when it comes to home ownership, right? And the turbulence happens sometimes. I feel like the most anxiety-ridden times are usually in the process of buying. But just know, like, if any challenges do come up after home ownership happens, you have the lawyer, you have myself, you have Chris. So you have Sean, myself, Chris, your real estate lawyer, your realtor, your mortgage broker. And we are here to help you. Like, even if you're not at that state of actively looking for more properties or selling, we're humans, and I think communicate as early and as efficient as possible. Just because we talk to a lot of people, we have a lot of support. Like, for example, REC Canada has a support line. Like, if you need a contractor, a cleaner, a mortgage broker, a real estate lawyer, like, we can help connect you with this. But we also have a ton of advice that maybe you're not doing the right thing, potentially. And just make sure that you have these things on your calendar, like when your mortgage payment's coming out. If you're not paying property taxes within the mortgage, like, make sure that all of those things are satisfied, because those are your obligations, and we don't want anything to affect you enjoying that home and also having payments balloon or compound, actually, for that matter. And I do want to say this, like, home ownership is achievable, like, especially like a ton of young Canadians. And I hope I'm still in that bracket, even though every single day I go less and less in the young Canadian bracket. But home ownership is achievable. A lot of young Canadians feel like it's not, or it's not right for them. I really believe that it is a way for you to create at least some sort of financial freedom for yourself in the future if you do it correctly, and you potentially leverage correctly, because Chris said it at the beginning. Home ownership also gives people an opportunity to not just climb the ladder in regards to the type of home you have, but also the type of wealth that you could generate. But you got to do it safely. Where I think a lot of people are learning that lesson right now, including myself. And you do have to respect the process and the time itself. because this isn't, even on like home values, like home values go up and down. They go up and down upwards if you look at the trend, but like the long-term trend, but values do change as well. And you just have to be able to understand like this is a long-term purchase, especially your primary residence. This is a long-term purchase. This is something that will hopefully put yourself in the position for financial freedom in the future. And it is achievable, right? But the difference really depends on how good of a plan and how good your all-star team is, which is why I wanted to have this conversation today. Kind of before I do close it and go into some next steps, like Sean, Chris, like, do you guys have anything to add to that?
I think it was a great point in terms of the process itself. To Sean's point earlier, Sean happens to be the lawyer. Any of the lawyers happens to be at the end of the line. So it's really up to, in my opinion, it's really up to the mortgage broker to make sure that every part of that process through the client's journey is timed, knowing where the experts are coming in. So if it's the bank that needs to give us the approval, how long is that going to take? If it's the client preparing their documents to ensure that the bank has enough time to give us the approval, how long does that take? How long is it going to take for the appraiser to do their piece within that 5 days? If it's not done within that 5 days, what do we do without having to get an extension? Once the file is complete, the bank needs the file to be complete 10 days prior to closing. Now, as long as that's done, I know that Sean, being at the end of the line, that he's going to have enough time to do all of his piece to service the client at 100% to ensure that he's not left at the last minute. So that piece of all of the teams of experts that have to do their jobs along the way is what we do. Like, we're very big on the timing piece, as with yours that we've done. It's really ensuring that everyone's doing their job within the right time in order for nothing to go wrong on closing.
And if I didn't have some of these security pieces in place during my buying process, like it could have been a lot different and there could have been a lot more surprises. So it's important to understand the process. And like I'll say it again, like send an email to anyone who wants a physical copy of this book, The Real Estate Intelligence, info, info at reccanada.com. Understand the process. At the end of the day, it is the buyer's responsibility to really understand what they're getting into because it's a big commitment. And assemble that all-star team. Like assemble the people, the troops that are working in your corner, that have your back. And I can say for certain, service providers like Sean Daniel, like Chris D'Souza, they are great resources to have in your corner. And I implore everyone to reach out to them, and we'll send an email separately with everyone's contact information. And to kind of close off this webinar, right now the market, like I'm sure everyone's aware, the market has shifted incredibly since what we saw, like even 5 years ago. And there is more than ever in my professional career, more than ever, an immense buying opportunity for first-time home buyers right now. We are seeing prices go down. We are seeing, because of the lack of buyers on the market and the amount of listings, we're seeing hundreds of listings every single week come up that are not selling. Like there is a ton of listings coming up right now. And we have an opportunity as buyers, if we are in the right position, if we have the right plan and the right budget, all of that, we have an opportunity to really finally get into a property and not overexpose yourself. We are not competing in most cases with 20 other buyers where we have to waive the home inspection condition, the financing condition. We have to, get the closing really close so the seller will look at maybe our offer. And then from there, it's like, really, let's close our eyes and throw a dart at the board to see if the price fits. Like, that's not good. Those are not good tactics for buyers. We have that buyer's market right now. And I implore everyone that has, even if you don't have your savings in place, even if you haven't had that conversation in place, I think a conversation with gentlemen like myself, or with people like myself, like Chris, like Sean as well, but I think it's a little too early with Sean on the process, but still, connect with us, guys. Let's have a conversation. Let's see if homeownership is right. Let's see if we might be able to help. So I use that my word really strongly because I think the three of us both of you will strike the same tune I'm about to say. The reality is we can't help everybody. But having this 10-15 minute conversation with at least myself to see if it might be right, to have that beginning initial mortgage question with Chris, to see if you do have the right ducks in a row, is critical right now because there is a tremendous buying opportunity and we can finally take our time, go and see those 10 to 12 properties that I'd recommend at the beginning before putting offers in, and truly, truly getting a home that will actually put you on the real estate ladder properly,
Yeah.
not aggressive.
Ty, you know what, Ty, for all of the listeners on this call, I'm going to extend, and I'll leave it to you to send out a link to my calendar, which you have personally. I'm willing to and will take all the calls for anyone that's on this call that has any questions of what they need to do and any scenarios that they're in that's going through their mind. You know, this is not an in-person event, so we're not speaking to any of these people individually here, but I'll be willing and able to have a conversation with each one and every one of you to help you get started, just to get an idea of where you're at. And then once you know all the things that we customize for you based on that conversation, you go run with it, you go work on it, and then you come back. And when you come back, I'll help you, I'll move you forward from there on out.
There's no pressure. There really isn't any pressure. It's more just to see if we might be able to help. And that's what we're doing here. Sean, Chris, thank you so much for joining me. I know I want to do more of these. I just really enjoy speaking about the buying process, especially to first-time home buyers. I think it's really important information that tends to get missed. And I hope everyone that is watching us live as well as virtually, does take this plan seriously and respects this process, because it is a important process and there's a lot of hidden pieces if you don't know the questions to ask and who to assemble. So I appreciate everyone joining us today. Sean, Chris, I appreciate you both joining me, and collectively we have 55 plus years of experience in this industry, and it shows. And I really appreciate you guys sharing some of that insight today. And now we kind of leave it to all the first-time home buyers, or maybe the parents who have children that are in a position maybe to be a first-time home buyer in the future. Now we leave it to you guys. Let's have a conversation, and let's see if this might be right. Thank you for joining us, everyone.
Thank you.
Perfect. Thank you, guys.